Assalamualaikum and good day everyone. Hi, my name is NOOR and my matrix number 2025222966 and I will present on the topic the future of cashless Islamic banking in Malaysia. So first, what is Islamic finance? Islamic finance is a financial system that operates based on Sharia principles. It means all financial activities must follow Islamic rule and be done in an ethical, fair and transparent way. Unlike conventional banking, Islamic finance is not only about making profit but also about ensuring justice and avoiding exploitation in financial transactions. In Islamic finance, there are a few important principles. The first is the prohibition of riba, which means interest. In Islam, earning money purely from interest is not allowed because it can create unfairness between people. Instead, Islamic banks use concepts like profit sharing, trade and asset-based financing. Another principle is the prohibition of gharar, which means excessive uncertainty in contract. This ensures that all terms in financial agreement must be clear and understood by both parties, so there is no hidden terms or confusion in transaction. Overall, Islamic finance promotes an ethical and fair financial system. It encourages honesty, transparency and responsibility while avoiding activities like gambling, speculation and any harmful financial practices. Moving on to Malaysia context, the banking industry is experiencing rapid digital transformation. Malaysia is moving towards a cashless society where people are increasingly using less physical cash and more digital payment methods in daily life. Today, we can see that most transactions are done through online banking, mobile banking app, e-wallets and QR code payments like Do It Now QR. These methods are faster, easier and more convenient for users. At the same time, Islamic banks in Malaysia are also adopting this technology to improve their services and meet customer needs. This development is also supported by Bank Negara Malaysia and government initiatives that encourage digital payment, adoption and fintech growth. Because of this, the Islamic banking system is also becoming more digital and modern. In terms of statistics, Malaysia has shown very strong growth in cashless transactions. Recent data shows that e-payment transactions have reached more than 18 billion transactions in 2025, which is a significant increase compared to previous years. On average, Malaysians are now making hundreds of digital transactions every year, showing that cashless payment has become part of daily lifestyle. In addition, Do It Now QR has expanded widely across the country with millions of acceptance points available nationwide, making it easier for people to pay without cash. These statistics clearly show that Malaysia is rapidly moving towards a cashless economy, and this creates a big opportunity for Islamic banks to grow their digital and Sharia compliance services in the future. So, in conclusion, Islamic finance provides an ethical financial system based on Sharia principles, while Malaysia's shift toward cashless banking and fintech growth supports the future development of Islamic digital banking. That's all from me. Thank you.
Despite the rapid growth of cashless Islamic banking and fintech service in Malaysia, several challenges continue to affect their development. Among the major current issues are cybersecurity threat, Sharia compliance challenges, and digital divide. Let me begin with the first issue, which is cybersecurity and online scam. As more people use online banking, mobile banking application, and e-wallet, the risk of cybercrime is also increasing. Many users become victims of phishing scam, fake banking website, account hacking, and unauthorized transactions. These issues affect customer trust and confidence in digital banking services. It is because people may feel unsafe using cashless payment system. In Islamic banking, the concept of amanah or trustworthiness is very important. Therefore, Islamic financial institutions must ensure that customers' money and personal information are well protected. To address the issue, banks should strengthen cybersecurity system, improve customer verification method, and provide awareness campaign about online scam. The second issue is Sharia compliance in financial technology or fintech. Today, digital financial products such as cryptocurrency, buy now pay later, and digital investment platforms are becoming increasingly popular. However, some of these products may involve elements of riba, gharar, or extensive speculation which are prohibited in Islam. These create challenges for Islamic bank and fintech company because they need to ensure that all digital financial services comply with Sharia principles while remaining innovative and competitive. Therefore, strong Sharia supervision, clear fintech guidelines, and cooperation with Sharia scholars are essential to maintain consumer confidence and ensure compliance with Islamic law. The last issue is the digital divide and lack of technology access. Although cashless banking is growing rapidly in Malaysia, not everyone has equal access to digital financial service. This issue mainly affects elderly, people, low-income groups, and those living in rural areas. Although Malaysia recorded a high household internet access rate of 97.1% in 2025, a digital gap still exists between urban and rural communities. Internet access in urban areas reached 99% compared to only 90.7% in rural areas. This means that some people in rural areas may face difficulty accessing digital banking and fintech services such as mobile banking, e-wallet, and cashless payment system. In addition, some individuals may lack smartphone or the digital skill needed to use these technologies effectively. As a result, they may be excluded from the benefit of cashless Islamic banking. To overcome this issue, the government and Islamic financial institutions should improve digital literacy program, develop user-friendly banking application, and expand internet infrastructure, especially in rural areas. Overall, this issue highlights the challenges that must be addressed to ensure the sustainability growth of cashless Islamic banking and fintech in Malaysia.
My name is Sharida. I will continue by explaining how Islamic finance is applied in this digital era, focusing on its key concept and real-life implementation. So the first key concept is riba, which means interest. In conventional banking, banks make profit by charging interest on loans. However, in Islam, riba is strictly prohibited because it can lead to financial injustice and burden on people. Even though Malaysia is moving toward digital and cashless banking, Islamic banks must ensure that all transactions remain completely free from riba. The second concept is zakat, which refers to obligatory charitable giving for eligible Muslims. Islamic finance does not only focus on generating profits, but also emphasize social welfare and helping the community. In the past, Muslims need to use physical cash to pay zakat. However, today, cashless technology has made the process much easier through online banking apps and other digital payment methods. A real-life example of cashless Islamic banking in Malaysia can be seen through Islamic banks such as Bank Islam Malaysia Berhad and My Bank Islamic, which nowadays users can do daily transactions like QR payments, online transfer, and bill payments through apps called BIMB Mobile and MAE. In addition to that, apps also zakat payments can be made without needing to visit physical counters, making the process faster and more convenient. This development is influenced by several factors, including technological advancement and widespread use of smartphones in daily life. Overall, this proves that the future of Islamic banking in Islam is becoming increasingly digital. Society can move towards a cashless lifestyle while still maintaining important Islamic values such as fairness, transparency, and helping those in need. To give you a clear picture, let's watch a short video on how zakat can now be paid through banking apps in today's cashless digital transaction.
Now Now I would like to explain the positive and negative impact of positive impact first. Allow faster and easier transaction. Unlike the traditional banking system, the transaction can be completed quickly, especially for international transfer. This helps users save both time and transaction costs. Second, increase financial inclusion. People who do not have access to the traditional banking service can still participate in financial activity using only a smartphone and internet connection. This creates more opportunity for individuals to access financial service. For the third, offer transparency and transaction. All transactions are recorded on a blockchain system, which allows users to track and verify transaction record. This increases trust and reduces the risk of manipulation. Lastly, encourage innovation in digital finance, support the development of new technology and digital payment system, contributing to the growth of the digital economy. Negative impact. However, several challenges. First, there is a risk of cybercrime. Users may become victim of scam, fraud, or tracking if they do not take proper security precaution. As a result, they may lose their digital asset. Second, some people find it difficult to understand the technology can be complex, especially for elderly individuals or those who are not familiar with digital finance. Third, prices are highly volatile. The value of can change dramatically within a short period. This creates uncertainty and increase the risk of financial loss for investors. Lastly, they are concerned about security and privacy. If users lost their password or private key, they may permanently lose access to their. In addition, personal information may be at risk if security measures are weak.
Next, I will explain several solutions to enhance the positive impacts and reduce the negative impact of cashless Islamic banking in Malaysia. To enhance the positive impact, Islamic banks should continuously improve their digital banking platform to ensure transactions remain fast, efficient, and user-friendly. In addition, financial service should be expanded to rural and underserved communities so that more people can benefit from Islamic digital banking. Banks should also strengthen transaction transparency and accountability, which are important principles in Islamic financial. Furthermore, improving digital infrastructure can ensure customers have access to banking service anytime and anywhere. On the other hand, several measures can be taken to reduce the negative impact. Firstly, Islamic Bank should strengthen cybersecurity system to protect customers from online scam, phishing attack, and unauthorized transaction. Secondly, digital literacy program should be provided to help users, especially the elderly. It will make them become more familiar with digital banking technologies. Bank can also promote responsible spending by providing budgeting and financial management tools within their application. Lastly, stronger data protection measures are necessary to safeguard customer information and maintain public trust. In conclusion, cashless Islamic banking offers many benefits, including convenience, accessibility, and transparency. However, challenges such as cybercrime, limited technology access, overspending, and data privacy concerns must be addressed. With strong cybersecurity, digital inclusion, and continuous adherence to Sharia principles, cashless Islamic banking can continue to grow sustainably and support Malaysia's digital economy while maintaining Islamic values.